Hello guys, welcome back once again to the Financial Academy YouTube channel. Yes, of course. Welcome back once again to my YouTube channel. So in today's video episode, I'm gonna be teaching you straight to the point. I'm gonna go straight right now. What I'll be teaching you today is how to catch big moves in the forex market. Are you getting this? Of course. So in today's video episode, I'm gonna be teaching you how to catch big moves and make consistent profit in the forex market. So if this is what you like, make sure to like this video, make sure to subscribe to my YouTube channel, and also comment down below if you have any single question concerning any of my videos. Because in today's video episode, follow me if you want to be making consistent profit in the forex market, especially as a beginner. You need to know and learn how to catch the big moves, how to catch the big waves, the big trend in the forex market. So in this video episode, I'll break down everything for you. So right now, follow me. Let me head over to my screen. When I head over to my screen, I'll be able to break down for you everything you need to learn and understand on how to catch the big moves in the forex market. Also, if you are seeing me for the first time, I create content concerning the forex market, the stock market, and the cryptocurrency market. Basically, financial market in general. Are you getting me? This video is for you if you want to know how to trade the financial market. You understand? So follow me right now. Let's go to my screen. I'll be able to break down everything you need to know. Follow me right now. Let's go to my screen. Let's go.
Hello guys, welcome back once again to my screen. How to catch big moves in forex trading, the complete guide. Yes, how to catch big moves in forex trading. This is the complete guide for you in this video. So in my introduction, I call it the allure of the big move. So let's continue. Imagine catching a trend that moves 500, 800 or even 1000 pips in your favor. A single trade that covers a week or a month of smaller profit. This is a dream of every forex trader, to capture the big move. While it sounds glamorous, catching this major market shift isn't about luck or guesswork. It is a disciplined process that combines patience, analysis, and strategic execution. In this comprehensive guide, we will walk you through exactly how to identify, enter, and manage and profit from a significant forex trend. Let's continue. Part 1 is the mindset foundation. Embrace the trend follower patience. Yes, embrace the trend followers patience. Big moves don't happen daily. You might go weeks without a perfect setup. The successful big move hunter understands that trading is a waiting game. Your job isn't to trade frequently, it is to be strategically positioned when the market makes the decisive move. Number one, the other one is shift from scalper to sniper. Restrain yourself from seeking constant action. The scalper mindset to waiting for higher probability opportunity. The sniper mindset means fewer trades, higher conviction, and emotional fortitude to hold through normal pullbacks. Number 2, which is part 2, is identifying environment for big move. Number 1 is this: understand the market context. Big move typically emerge from the major economic shift, like changes in monetary policy, interest rate cycle, or geopolitical realignments. The other one is breakout from prolonged consolidation. The longer the market coil in a tight range, the stronger the eventual breakout tends to be. The other one is trend continuation after a healthy retracement. Existing trend often make their biggest surge after a proper correction. Number 2 is analyze higher time frame first. Start your analysis at the weekly and daily chart. This time frame filters out noise and review the true underlying trend. A big move on the daily chart is often just a blip on the monthly. So always know the larger trend direction. Here are the key questions you need to know. Is the market in a long-term uptrend or downtrend or in a long-term ranging? This is the question you need to ask yourself whenever you want to analyze the market. Ask yourself, Is the market in a long-term trend, uptrend, or downtrend, or range? Then the part 3 is the technical toolkit for spotting potentials. 1. Support and resistance, which is the foundation. Major moves often begin at a significant support and resistance level that has been tested multiple times. The breach of a multi-year or low can trigger cascading orders and sustain movement. Moving averages, which is number 2, as dynamic guide. Use the 200 period and 50 period moving averages on the daily chart when price is above both and they are fanning upward. The trend is strong. The opposite for downtrend. Big moves often accelerate when price pull back to a major moving average and reject it, continuing the trend. The third one, which is number 3, is momentum indicators for confirmation. MACD, which is the moving average convergence divergence. Look for MACD to cross its signal line on the daily or weekly chart, especially if accompanied by a divergence. Price makes a new low or high, but MACD doesn't. The other one is relative strength index. Relative strength index can show overbought or oversold condition on a lower time frame, but a higher time frame, an RSI reading above 60 in an uptrend or below 40 in a downtrend can indicate strong momentum, not necessarily an intermediate reversal. Are you getting me? Number 4 is chart pattern. Flags and pennant after a strong move. This continuation pattern often precedes the next big leg. Head and shoulder or top bottom. These are major reversal patterns that can signal the start of a new sustained trend. Then the part 4 is the entry strategy or getting on board. Number 1 is this: wait for the break and retest. Yes, wait for the break and retest. The most reliable entries often come not at the initial breakout, but when price breaks at a key level, retraces back to the test, former resistance becomes support or vice versa, and then continues in the breakout direction. This retest confirms this level has flipped and increased the odds of continued movement. Number 2 is use the multiple time frame confirmation. Direction on the weekly, entry signal on the daily, precise entry on the 4-hour or 1-hour chart. All three should align in your favor. Number 3 is the trend line break and retest method. Draw a trend line connecting the recent swing high, which is downtrend, or swing low, which is uptrend. Wait for the break, then for the price to come back and kiss the trend line from the other side before entry. Then number 5, which is part 5, is risk management, the non-negotiable pillar. Number 1 is this: position sizing for the long haul. Your position must be small enough to withstand significant volatility without triggering panic. A good rule is risk no more than 1 or 2% of your account on a single big move trade. This allows you to stay calm during retracement. Number 2 is strategic stop loss placement. Place your stop loss beyond the level that, if hit, would invalidate your trade thesis. For a breakout trade, this is often below the market breakout level or beyond the last significant swing point. Never place a stop based on arbitrary dollar amount. It must reflect market structure. Number 3 is the art of trailing stop. As the trade moves in your favor, protect profit by trailing your stop. Method include moving average trade. Place stop below a rising 20 period or 50 period moving average on the 4-hour chart. The other one is support or resistance trade. Move stop to just below the last major swing low in an uptrend. Percentage of ATR trade. Move stops a fixed percentage or a multiple of the average true range behind the price. Part 6 is the exit strategy or letting profit runs. This is where most traders fail. They exit too early. Scare out. Don't top all at once. Take partial or logical target, previous swing high or low, Fibonacci extension, but leave a portion of your position to run. This balances the psychological need for realized profit with the potential for a home run. Number 2 is ride until the trend break. Your trading stop is your ultimate exit signal. Let the market take you out. Do not exit a strong trend because you're really bored, scared, or think it's gonna go or think it has gone too far. Trend can extend much further than anyone anticipates. Number 3 is this: watch for exhaustion signal or watch for exhaustion sign. Climatic volume spikes, extreme bullish or bearish sentiment readings, and clear divergence on the weekly or daily RSI or MACD can signal a trend is nearing exhaustion. This doesn't mean reverse immediately, but it is a sign to tighten your stop loss. Part 7, real world example. Let me use the USD/JPY downtrend of 2023. Let's briefly apply the framework to recent scenario. Number 1, which is the context. The Bank of Japan hit at policy shift while the Fed pauses hike. Number 2 is the higher time frame. Weekly chart shows a break below the key support at 138.00. Then number 3, the entry. Price breaks 138, retraces to 137, testing broken support as a new resistance, and sell off. Entry on the 4-hour bearish engulfing candle. Then number 4, stop loss. Place above the high at 138.50. Then management or risk management. First profit target is at 132, which is the previous weekly low. Have position close. Remember that trade will stop below the 4-hour swing high. Then the result is trend runs for months, capturing over 600 pips on the run. Common pitfall to avoid. Number 1 is this: overtrading during quiet period. Yes, not every month will offer a big move. Forcing trade in short guarantees losses. 2 is adding to a losing position. Averaging down on a big move bet is usually a recipe for a catastrophic loss. Number 3 is ignoring fundamentals. A major central bank announcement can override any technical setup. Be aware of economic calendar. Number 4 is lack of patience. Entering before confirmation or exiting before your stop or target is hit. In conclusion, the big move traders creed. Cashing big move is less about complex indicator and more about mastering 3 things: the discipline to wait for the perfect alignment of context, price action, and momentum. Number 2, the courage to act decisively when the alignment appears. Number 3 is the resilience to hold through the inevitable turbulence as your trade matures. By this, I will say this: start by reviewing the major currency pair on the weekly chart. Look back at history and identify the last 3 big moves. Study how they begin, developed, and ended. Then, with a demo account, practice the patience of waiting for a similar setup. The market will always offer another opportunity. Your success depends not on catching every move, but on properly capitalizing on the new few that align perfectly with your plan. Remember, in Forex trading, you are not paid for how often you are right. You are paid for how you are. When you are right, go catch those big moves. I get my point. So this is a big disclaimer that I always put at the end of my video. Trading Forex carries a high level of risk and may not be suitable for all investors. the possibility exists that you could sustain a loss or some or all of your initial investment. This content is only for educational purposes only and not just to be considered as financial advice. Always test strategies in a demo account and consider seeking advice from an independent financial advisor. So if you are watching this video up to this moment, always check out your strategies on a demo account before venturing into a new account. Always apply proper risk management. It is very, very important as a trader. Even if you are experienced, always apply proper risk management. Always be disciplined. Always be disciplined, and also control your psychology. Always control your psychology. Know when to stay out of the market and know when to be in the market, and know when to close your chart and go and rest. Avoid overtrading. Avoid overtrading. This is my last warning. Avoid overtrading. Trade slow but consistently and steady. You will see changes and results in your trading. So if you have watched this video up to this moment, thank you for sticking with me. Please make sure to like this video. Make sure to subscribe to my YouTube channel and also comment down below if you have any single question concerning any of my YouTube videos. And I will see you on my next video episode. Please take care, stay safe, live life, and be happy. I will see you on my next video episode. Bye for now.